All right, that was actually pretty fast. I didn't expect such a significant move here on the dollar yen. That happened very, very quickly. So what is happening right now? Well, there's a little bit of movement in the market here, and I got involved with a cipher pattern in here. I got involved with the cipher pattern on the Kiwi dollar 1 hour time frame. And what I'm looking for is a move, some structure-based moves towards the upside here to retest the highs and continue a little bit further. And then as I'm doing my workload here for the day, we had dollar yen. We had dollar yen notify me on my platform that we had target 1's hit at the 382. So what did happen here? What are we looking at? Well, this isn't a Gartley pattern because we're just shy of the B point. We're just shy of a 618 B point retracement. This is my impulse leg here, right? So I've got swing low to swing high. We take a Fibonacci retracement tool. I'm helping identify a pattern trade right now. As you've been noticing in my videos, that's the value I'm trying to give to you, is to follow along with me here with the trades that I'm taking, okay? We grab a Fibonacci retracement tool and we go from swing low to swing high with our impulse leg, okay? So swing low to swing high. You can see that price action came down and we almost touched the 618, but we didn't, okay? If we did, that puts us on Gartley pattern alert. As price action came down, we hit the 382 and the 50%. So once it hits the 50%, I'm on bat pattern alert, right? That's what I'm looking for. So as price action pushes up, I'm looking for the second criteria, which is a Fibonacci retracement. I just zoom in a little bit. Which is a Fibonacci retracement from this swing high to this swing low. Okay, so another Fibonacci retracement from swing high all the way down to swing low. And what we're looking for is a minimum 382, 50%, 618. Anywhere within this level, okay, anywhere within the 382 to these highs right here is a valid, a potential back pattern, right? The only thing we have to look out for here is if price action pushes above our X point right here, then the trade is no longer valid, right? Then the pattern is no longer valid. So that's what I'm looking for. The third criteria, so it's a minimum of 382, right? The third criteria is a Fibonacci retracement from full leg of the move, right? So this impulse leg, swing low to swing high. Fibonacci's swing low to swing high, like this. And I'm looking for a CD completion, so the market to come all the way down into an 886, right? So here is our 886 right here in this little circle. Now, as price action hits the 886, this is where my orders were resting. We get involved in the markets, right? So that's our three criteria. We identify the impulse leg. We had a B point come down, minimum of a 382, and then we had a C point, minimum of a 382 again, and then an X to A move, Fibonacci, all the way down into the 886, which we did. Price action came all the way down, triggered our entries, and then we get involved in the trade. And as we did, a couple of bars later, we just skyrocket into the 382. Now those are nice trades to have. We call them pain-free trades. So this is a 70 pip move, okay? towards target 1. And now what happens? Trade management, right? We identify the pattern trade. We wait for price action to come to us. Price action then triggers our entries. And once price action triggers your entries, that's it. Your analysis is finished. That's it. You get involved in the trade and then you wait. So once you're involved in the trade, one or two things is going to happen. It's going to hit your stops or hit your targets. That's it. You sit, you wait, you do nothing. All your hard work was done. That's what I'm trying to say. So, knowing that it's going to do one or two things, hit your stop or hit target. Once it hits target, then we do our trade management. Okay, what is that? As price action moves and hits the 382, we take off half of our position. We roll stops to break even, as you can see here. Okay, my little arrow like this. So we roll stops to break even, and then we wait again, as we can see in front of us right now. We don't get greedy with it. We don't say, oh, it's almost hit our target 2s. We should just get out of it. No, that's not what we're doing. Because you didn't backtest it that way, right? So you can't trade it that way, right? That's right. You have to wait and be patient. We have to do daily disciplines practice daily. So we trade the exact same way that we tested, because we want to replicate the positive results, the profitable results that we tested. We want to replicate that every day. And to do that, it's exactly what we're doing. We're waiting. Doesn't matter if it comes almost touches. Doesn't matter. We be patient. That's it. So, drag that down there. All I'm going to do is sit here and wait for this trade to play out. It doesn't matter if it comes all the way back down and stops us out. We do the same thing. We do the same process. We delete all the drawing tools and then we look for the next trade and we look for the next opportunity. Same thing if price action goes on and hits target 2. We do the same thing. So it doesn't matter what the outcome is here. We're going to do the same thing. Continue the process. That's it. So we'll see what happens with this. What I'll do, there's actually quite a pullback happening at the moment. What I'll do is pause this and we'll come back to it as it develops. Another progression of a day trade on the dollar-yen 1 hour time frame. This is a bat pattern. So target 1, we'll take that. We'll take 70 pips and we'll pause this and see what happens. See if we get stopped out or see if we hit target 2s. I think this is a valuable video, one way or the other. All right, I'll talk to you soon. It's actually been the weekend for me, but it's only been a couple of seconds for you. We're back here on the dollar-yen 1 hour time frame. We were watching this trade play out, and I said I would be back if it hit target, but then, you know, the weekend happened. So I have to come back in the office today. It's Monday morning. It's 10 a.m. Monday morning. So I'm doing my trade management right now. Wanted to resume the recording of what we're talking about because we did come up and hit target 1. We took off half of the position. We rolled stops to break even. And then we were looking to see if we come up and hit target 2 or if we come down and get stopped out. Unfortunately for me, price action did roll it. We tested here. We tested this level again towards these highs, and then price action just completely dropped, right? So we didn't get filled on target 2, and then we came all the way back down, stopping us out for break even, right? Now I'm still going to come in every day and trade the plan. and do the same thing the same way every single day. Because that is what I signed up to do. And that was the main point of this video, is first to identify the bat pattern. So I help identify the bat pattern, and then secondly, we just stick to the plan because that is what was tested. And as a professional day trader, that is what you need to do. Every time you come into the markets, you execute the trade plan no matter what. Win or lose, doesn't matter the outcome. Every single day, you trade that plan and you execute that to the letter, to the T. Exactly. Because you have faith and you believe that over time, you are trading a winning system, something that has a positive expectancy, something that gains more than it loses. That is what we are meant to do every single day. Trade the plan. Now there is a little bit of more movement going on in the markets, but right now I'm going to turn off the charts and I'll get back to those on London Market Open. And if you're in the live room, I will see you then. If not, I will see you next time. Be safe, enjoy life. I'll talk to you soon. Trade the plan.